We got the U.S. Inflation numbers indicating that the rate of price increases cooled in November, sparking hopes that the Fed will be prompted to cut interest rates again. Let's get more from Colin Cieszynski, portfolio manager and chief market strategist at SIA Wealth Management. Colin, thank you very much indeed for joining us.
Thanks. Good morning, Andy.
We won't spend too much time on U.S. inflation because we keep hearing commentary that the data is distorted.
Well, and I think we saw that more in the employment numbers in particular, because you would have had large numbers of layoffs and then people coming back. So that was yesterday. Today, inflation is much bigger than just the government, right? So somewhat distorted, but definitely encouraging. It was well below expected. It definitely showed inflation is benign, and if the Fed needs to, they certainly they don't have inflation blocking them from cutting interest rates if they want to continue that next year.
Do you pay a lot of attention to interest rate policy, Colin, generally?
Generally, I do, especially for how it relates to. It doesn't always relate one-to-one to the stock market, particularly in Canada, but it does work its way around through currencies and commodity prices and things like that. So today we've had an interesting day. The Bank of England cut rates, but it was a very close vote. The people who wanted to cut only won by one vote. The European Central Bank held rates, which was widely expected, but they're down almost to 2% like Canada. So they're even lower than Canada. So that was expected. They've already cut a lot. The one interesting one is tonight, the Bank of Japan is actually expected to raise interest rates from 0.5 to 0.75%. So they're actually going in the other direction right now. But again, they're substantially lower than anybody else.
Yeah, they're coming from such a low base. Colin, what are your thoughts about the market in just barely more than a week left in December? Do you think we will see ongoing selling in these names like Oracle or Broadcom?
Well, it's certainly looking that way. But what's interesting is I'm looking at the market in the last hour or so, and after basically being down all week, it looks like the Santa Claus rally might have arrived. But it's a little early. Let's see what happens over the course of the day. But certainly, anybody who wanted to sell out of a lot of those names has certainly had the chance to do so. A lot of these big cap tech names are now down several days in a row. And off of this inflation number, it looks like we're getting a relief rally. And the other interesting thing is that today we were also getting overnight already getting a bump in NASDAQ stocks off of Micron earnings.
Yes.
Micron has really, really good earnings report. And this time the market was responding favorably to it. So that's a sign that maybe some of the tech stocks were getting a little washed out in the short term. Now we're getting a nice bounce.
Yeah, let's have a look at Micron because that has been something of an investor darling. MU, I believe, is the symbol. Based in Idaho, which is interesting, not thought of as a tech sector. And investors did like the numbers from that company. Maybe we could have a look at Micron, and there we have it. I'm not clear what the stock is doing today, but I'll update the viewers in a second. We did, though, see early more selling in our friends at Yahoo. Colin, what about the big Canadian banks? Maybe we can put up a 5-year chart for the Canadian Bank Index. Are you overweight or underweight the big lenders?
At the moment, we are a little bit underweight in the actual banks themselves, but we're pretty much market weight in terms of the financial sector because we do own a number of insurance companies. So we this year have been more weighted to the insurance companies than to the banks. But the banks have done fantastic, and the banks have done extremely well, and the banks have continued to do well following their earnings reports.
And actually, just backing up there to Micron, the stock is actually up 15% in early trading. I suppose, this has been quite a year, hasn't it, 2025, with these enormous projections and enormous proposed spending on AI.
Absolutely, and it's been that has been one of the big stories of the year, and we've seen AI drive the market up, and corrections in AI drive the market down, and it's added to a lot of volatility in the market, but at the same time, a lot of strength as well. I mean, that is a huge monumental investment that is going into this, and it's not just the actual programming itself, but it's everything behind it. So we've seen things like utilities do extremely well because guess what? There's going to be a ton of power demand coming from that, and demand for semiconductors and demand for other things. And it's basically been this huge investment has been underpinning the whole market in across a number of sectors, not just the flashy tech names that we all see, but underneath as well.
Let's put up a one-year chart for Meta because it's so interesting. Mark Zuckerberg has such power at that company. He has made massive bets on AI, and there are concerns among some investors that he's going too far. The stock is still off its record highs.
Yeah, I mean, so we're seeing that, and that's the other side of it, right? I mean, there's companies that are generating revenue from this, and there's companies that are spending. However, with something like a Meta, we've seen before where they've spent a lot of money, the revenues don't come in right away, but then when the revenues do come in, the stock explodes. So we're kind of in that in-between phase right now, it seems, on Meta, where, yes, they're making the big investments, the revenues on the other side haven't perhaps necessarily shown up yet, and people are waiting to see what happens.
It's interesting, though. Zuckerberg got it wrong with the metaverse, basically. He was talking about avatars and we'd all live in this second life, but that never panned out.
No, not to the. I don't think it. Certainly not to the extent that he thought it would.
Colin, what are your thoughts on the pipeline stocks? Give us your view on TC Energy and Enbridge for the year ahead. They've had a pretty good run lately.
They sure have, and pipeline stocks are interest sensitive, so they've certainly benefited from interest rates coming down on both sides of the border. Really, I mean, we're seeing its TC on this chart has run into a little bit of resistance, but it's also had a big run. And so I think what we're seeing probably a function of the Bank of Canada is kind of paused after a series of rate cuts, and so I think it's the same thing. It's probably more of an interest rate related story, particular to Canada at the moment. But again, these are stocks that have had a huge run and are just kind of consolidating at the moment.
I mean, what a year! And we politically, actually, Enbridge. Yeah, Enbridge, it is interesting. A few years ago, remember Enbridge, well, this is quite a few years ago, Enbridge out of favor. People thought they had bitten off too much in terms of massive spending plans. What else? What are you looking out for in 2026, Colin? What do you think is going to be is there a phenomenon out there or something that's likely to happen that investors are not preparing for?
Well, I think that what we're looking at for 26, I go to the presidential cycle, and it's going to be year two, and year two has historically been one of the more volatile years during the presidential cycle. Oftentimes, the presidents try and do all the popular stuff first. They want to get reelected. The opposition starts fighting back because they want to do better in Congress. And as I look back to President Trump's first term, his first term, 2017, the market did amazing. And for most of this year, the market has done amazing. And then 2018 was a very choppy year for stocks. The market kind of ended up basically grinding sideways for the better part of a year. And it was a bit of a struggle because they ended up at the time having a big sell-off right at the end of the year, and the market didn't really get much chance to bounce back, which it then did in 2019. And 2019 was a fantastic year for the stock market. So the theme, I think, going forward is going to be, to me, for 26 is where do we go from here? Do we continue going, or do we get into kind of this more choppiness, questions about valuation that we've starting to grind sideways that we've kind of seen over the last 6 weeks or so?
Colin, we better leave it there. If we don't talk to you again this year, have a wonderful holiday and a great 2026.
Thanks. Happy holidays and Happy New Year.
Colin Cieszynski, Portfolio Manager and Chief Market Strategist at SIA Wealth Management.